Last week, the market finally got what it had been waiting for, the very first interest rate cut of 2025. The Fed pulled the trigger, lowering rates by 25 basis points. On the surface, it's not shocking. Everyone was already bracing for this move. But here's the catch: if it had been 50 basis points instead, markets would have exploded. So why not go bigger? Chair Powell made it clear. This wasn't about panic. It was about risk management. His words: the Fed doesn't want to be reckless, but they want to stay one step ahead of a possible hard recession. Think of it as the Fed walking a tightrope. They can't afford to move too slow, but they also can't afford to move too fast. The dot plot division. But the real shock wasn't the cut itself. It was the Fed's dot plot. Inside the central bank, disagreement is sharper than ever. 9 members see 2 more cuts this year. 6 see no more cuts at all. 1 even projects a rate hike. And Stephen Miron, Trump's appointee, went rogue, pushing for a 50 BPS cut right out of the gate. What does that tell us? It tells us that the Fed itself doesn't know where the economy is heading. That uncertainty is what keeps risk assets on edge. Based on the dots, the market is now pricing in another 25 to 50 BPS of easing before year-end. For crypto investors, those dots are more than just ink on paper. They're the roadmap for liquidity, volatility, and the next big swing. Bitcoin on the edge now. Let's talk Bitcoin. After the Fed's move, the king of crypto is sitting on a knife's edge, right above $115,000. Here's the danger zone. Glassnode says if Bitcoin slips below $115,200, momentum could collapse, opening the door to $108K, even $105,000. But hold the line, and demand might stay strong enough to fuel the next bullish leg. Look deeper and the tension is clear. Before the Fed decision, shorts were getting crushed. Right after the cut, longs got liquidated instead. That flip tells us traders are stretched thin, whipsawed by every headline. Meanwhile, the options market is on fire. Open interest is now a record 5 million BTC. And here's the kicker. A massive chunk of those contracts expire September 26th. The max pain levels? $112,700 for longs, $121,600 for shorts. In other words, no matter which side you're on, the market is designed to hurt you first. The next breakout, up or down, will likely be shaped in the next 2 weeks. FTX Payout. The altcoin wildcard September 30th. Market down. The ghost of FTX returns with a $1.6 billion payout to creditors. It's historic. Never before has a bankrupt exchange managed a recovery this big. And here's where it gets interesting. Some analysts believe this cash injection could be the spark for an altcoin rally. Fresh liquidity. New demand, a shot of optimism for retail traders who've been battered for months. Will it be enough to reignite altcoin season? Maybe, maybe not. But when billions suddenly flow back into the market, you can bet something's going to move. SEC's ETF game changer. Now let's shift to regulation. The SEC just pulled off one of the biggest changes in years. They approved something called generic listing standards for crypto ETFs. What does that mean? Until now, every crypto ETF, Bitcoin, Ethereum, whatever, had to battle its way through a case-by-case review. It was slow, political, and exhausting. But with this decision, the game changes. From now on, if exchanges like NASDAQ, CBOE, or NYSE Arca meet the checklist, ETFs can go live without direct SEC review. That means XRP ETFs, Solana ETFs, even Dogecoin ETFs could be around the corner faster than anyone expected. This isn't just bureaucracy. This is a door swinging wide open for institutional money. More ETFs, more liquidity, more adoption. The question is, how fast will the floodgates open? Grayscale's breakthrough multi-asset ETP, and finally, Grayscale just scored a milestone win. Its Digital Large Cap Fund, or GDLC, is now officially the first multi-asset crypto ETP on NYSE Arca. Here's the breakdown. 72% Bitcoin, 12% Ethereum, 5.6% XRP, 4% Solana, and 1% Cardano. This fund has existed since 2018, but only over the counter. Now, with SEC approval, it's a listed product. That means traditional investors, pension funds, asset managers, family offices can tap into a basket of crypto without ever touching a wallet. It's mainstream adoption in slow motion. Not flashy, not viral, but steady. One ticker at a time, crypto is merging with Wall Street. So here's the takeaway. Central banks are divided, Bitcoin is cornered, altcoins might get a surprise boost, and ETFs are about to multiply like wildfire. The question for you is simple. Are you prepared for the next wave of volatility? Because the market isn't waiting, and neither should you.